Welcome to the Altcoin Hour, your weekly alpha. Yeah, we breaking down the charts, flipping bags, playing smart, from the dips to the moon shots, connecting all the dots. Let's get it. Altcoin Hour.
All right. Welcome to the show. I hope you guys are doing very, very well. I think we're good. We got a massive day in the 24th. I'm going to talk about the 24th today. We're going to talk about a lot of stuff. And I think, let me see here. Slight little pullback too. We'll get into that as well. But hand clap to you. I hope you guys are doing good. I had to get everything straight. I had a little, some slight little issues. But I hope I'm coming out. I'm hoping audio is good and everything is, showable on the screen because I had a little crash. But we're here and we're going to be talking about a lot of great things today. Definitely going to be talking about this. And I definitely want to talk about this. Chainlink AWS. I'm going to, not too techy, but that was a very important situation that happened there. When it comes to not only adoption, real, tech, blockchain tech, these oracles being adopted, integrated into AWS. But that's the first domino, I believe, that actually fell, and it fell into the real world pretty hard. And I think you're going to have platforms like Quant, Aptos, a lot of other platforms are going to follow, not necessarily probably in AWS, but a lot of people are watching, how this is going to play out. And I want to talk about the benefits and those actual oracles that are in place right now, and the benefits not only for the Link token, but adoption. That integration was huge. And we're going to get into Clarity Act too, because there's some nuances there that I want to talk about as well, because there's an ethics issue that I believe is going to be a major roadblock when it comes to the Clarity Act. And we're going to talk about that because there's some other issues too with DeFi governance, but I believe the ethics issue, and we'll talk about that. That is going to be the major roadblock that they're going to have to get over, because you have 7 senators that these are Republicans, and I don't think they're going to sign it as is. And we'll talk about what those issues are here in a little bit. And I believe we're going to start the market because we had a little pullback. We touched 80K, but this pullback is shaking up the market a little bit. Plus, we really don't know what's going on in the Middle East. So, let's go ahead and get into the reports. It's an interesting time to be in this space. Bitcoin cruising $76,000. So we're consolidating pretty hard here. Is it going to go past 80K? This is the talk. I don't necessarily think it's going to go past 80K anytime soon. But as you can see here, when we did hit 80K briefly, pretty nice little, staircase, I believe. 2 steps down here. Massive sales, but you did get some OTC buying, institutional buying, which that really didn't help us to get back to 80K, because there's 3 legs here. There's ETF vehicles, there's institutional buying, very minute level of retail, and then there's your FOMO that happens every time when it comes to altcoins. When we see the Bitcoin run up, I don't think it's really affecting the altcoins like it used to. I think the 4-year cycle is dead. I was talking to Wada. He was on his stream the other day, and I don't think he knew it was me because I kind of rebranded my channel, but we were talking about the 4-year cycle, and Wada agrees with me. It's dead. So where we go now and beyond, it's kind of undetermined, but we'll get there, right? Welcome to the show, Benji. Welcome, everybody. I'll give another hand clap to you guys. It is a Tuesday. And let's go ahead and get into the market, the top 25. And then we're going to get knee deep into this Chainlink and AWS thing, because I really want to talk about that. As far as the latest news that is breaking, yes, some news that broke. Kathy Woods just about 3 hours ago. Her bull thesis has basically been altered, and she's basically capitulated to the stablecoin narrative. Excuse me. And that stablecoin narrative is going to be huge. And, I'll briefly go into the AWS Chainlink link, because that proof of reserves, that particular oracle, that is going to allow for stablecoin activity to explode on Amazon and other, marketplaces as well, especially when RWAs start rolling. So just that little nuance is going to be huge, not only for Chainlink and other platforms of that nature, but the integration of crypto and stablecoins being used to purchase goods and tokenize assets, because that's where it's going to lead to on marketplaces like Amazon. It's going to be cool. You'll be able to use USDT. You'll be able to use Coinbase. I'm sorry, not Coinbase, but USDC and Tether, and maybe DIO, because I believe DIO may make it through the legislation purge. And that may be the only algorithmic stablecoin that I believe that's going to survive. And you're going to be able to use that, in the real world. So this Coinbase, I'm sorry, I keep saying Coinbase because they're on my mind, because of the Clarity Act discussion that I'm about to have too with you guys later. We'll get to that. But the USDC, the Chainlink, the AWS situation is huge. And we'll get into that in a little bit. But Kathy seems to be altering her perspective when it comes to Bitcoin, the longevity of it. We got a potential fork that may shake up the road too as well. A lot of people are calling it the eCash fork. They may change the name of this L1. That is leading me to believe that that's going to splinter. And we had Bitcoin Cash. We had a lot of forks. But this particular L1, I don't know if they're going to label it eCash. I think they should change the name. There's some bickering when it comes in, within the foundation about changing the name. But they're about to hard fork Bitcoin, guys. And there's been some leakage of it on, we'll probably get into that too, because a lot of people are not aware of what's going on. And I think it's a BlackRock push. I do believe. And this one, I think, is going to be successful. We've had several Bitcoin forks, but I think this one is going to stick. They're going to be offering a one-to-one transfer too, or swap, one-to-one. When it comes to Bitcoin, you'll be able to swap over your Bitcoin. I think this is going to, shake up the game. And the whole agenda is to redistribute Satoshi's wallet. I believe that's the agenda, to get that out of the quantum threat zone, essentially. So, and then there's 7 L2s that are in development too that's going to accompany this L1. So, this is going to be very interesting to see what happens with this fork and how it affects Bitcoin. But let's go ahead and get back into it, because we got to get into this Chainlink AWS effect, and we'll get into the Clarity Act update, because there's some things that you need to know about what's going on with the Clarity Act. Now, $76,000, I think we may get up to 77 just by, mere FOMO. And people just trying to buy this deal. Institutions, microsailors are going to be buying, I think, what was this? This was crazy. And again, I have to stress this OTC situation, because a lot of people get on me. It's like, Michael, it's not on-chain buying, this is OTC. I get it. But it creates FOMO. And this guy is talking about buying 2 BC per mind. So they're just buying more and more. MicroStrategies, they're in it. They're not going to fold here. They're in it for the long haul. Boom or bust. Sailors, this is going all in. Now, you have a lot of institutions. I was looking at Arkham earlier. A lot of moving out, a lot of moving in. There's a particular balance that's taking place here. Mind you, it's not really affecting the global market cap. It's still cruising 0.81% below where we need it to be. Altcoin season meter, forget about it. Don't worry about altcoin season. No chance in hell. RSI is 45. In fact, I want to look at the RSI. Let me check this out. I want to check this out, because you do see there's an equilibrium here as well. Everybody's in the middle, as you can see, all the white dots. It's going to be not a divided space, but a space that's holding tight. People are holding right now. People are hoping for the best. And I think that's the best thing you can do. You don't want to sell at a loss. You definitely don't want to buy at the top, because you have some altcoins. They're very low percentage range of altcoins, but they're doing pretty well because of the substance, because of the potent dev teams. Like Monad is hanging in there as well. Had some pretty good pumps in Monad. You have some L2s that are hanging in. You have some new projects that are building. So everybody's kind of in the middle. They're not doing anything drastic. But when it comes to Bitcoin ownership, the ETF vehicle, I believe, is basically holding the floor. And I'm just going to put it like that. I believe it's just, that's the floor. A lot of people disagree with me. But I believe the ETF vehicle, if we didn't have it, we'll probably be at around $50,000 right now, roughly. Okay. Because I don't think the OTC FOMO, I don't think the OGers and the institutional buying would have us here really close to 78. I don't think so, without the ETF vehicle. So, and I believe the same thing for Ethereum. Although you have a lot of whales that are selling Ethereum right now. Let's go ahead and get into this. $2,200 for Ethereum. Welcome to the show, Tracy. Hope you're doing great. And the Ethereum thing is a mixed bag. You do have some major upgrades that are coming later, probably really late in the quarter. Maybe they're going to bypass this. I don't know. But ETH is going to be okay. But I want to tell you, there's a lot of selling, and I'm pretty sure you guys understand this. And I believe it's just FOMO. There's some internal struggles too as well. But I believe ETH is going to be all right. It's currently at $2,200. So a lot of people are holding, as you can see with the RSI. There's no drastic, movements. It's just Bitcoin, and Bitcoin is reacting to tech. It's reacting to Middle East, ongoings. And there's a lot of grumbling about this potential fork. I think that we're going to have this fork. There is no question that they're going to fork Bitcoin. The major question is the Satoshi wallet. How much is that really going to be redistributed? Now, a lot of people aren't talking about this. How does that affect the price? Are these redistributions going to end up on the market, or are they just going to be converted into the new coin? We'll see. We'll see how this goes, because they're trying to do this before the year's up. So XRP, $1.37, down 3%. What is going on, Olivia? Welcome to the show. We have Solana, $83, down 2%. These altcoins are, they're not moving with Bitcoin. They're decoupled, essentially. TRX, 32 cents. It's moving like a stablecoin, excellent. We know why. Hyperliquid, trying to get back to $40. We'd love to see that at 50. I know a lot of people holding that coin would love to see that at $50. It is even basically. I'm going to call a 24-hour drop just a reactionary, a precautionary thing. Reaction, FOMO, not FOMO, but fear, essentially, because of what has happened to Bitcoin. Bitcoin hit 75,000 early this morning. So a lot of people these coins are reacting to that. And Hyperliquid is a fantastic perp exchange. So there's nothing wrong there, fundamentally. It's just a reaction when it comes to Bitcoin. You see that on a lot of these altcoins. 88, 24 cents. We're talking about Cardano. Cardano is going to do some really interesting things. Once we get past all of this language, hopefully we get it passed by May. I don't think so, but if we can, a lot of these alts are going to fly because of the Clarity Act and because of the market structure bill is so bullish, especially when it comes to DeFi. I believe the stablecoin issue, and we'll get to that. I keep jumping to it because I really want to get into that too as well. It's not about the stablecoin issue, but we'll get to that. It's all about ethics right now. Monero XMR, $381. I think it'll get back to $400 post language. Chainlink, we're going to get to that because $9 is a bargain. And if you understand what just happened, this thing is going to pop. Just a matter of time. Just waiting on language, waiting on everything to de-escalate. And you know what I'm talking about. In the Middle East, bullish flags fly. Chainlink is going to get to $100 real quick. And I'm explaining to you why, because that token just got an added use case, an added boost. And we're just in the infancy stages of that integration. So Canton CC is at 14. This is a good project too, guys. You got to look into Canton. If you haven't looked into Canton, it's down 2%. I think it's a great buy, $5.7 million market cap. Look into the nuances of Canton. I recommend you, because this is number 16 is like what I like to call it. And this is going to be a huge player going forward. It's a silent beast right now. It's smoldering. But I would advise you to do research on Canton, get to know Canton, because that thing is going to explode too as well. Zcash, Zcash, $334, up 5% by the way. Stellar XLM is I hate to even say this, but it's almost down 10%. And this is one of those alts where it's bewildering. It's an enigma here at this point in time. It's beautiful situation, payment beast. It's ready for prime time. But it continues to drop. It continues to sag price wise. I don't know what's wrong with that community, but you're holding a great situation. And I believe going forward, give it another couple of years, and you'll see these ISO compliant coins are going to just fly, because they'll have the actual vehicle to do so, and that vehicle will actually have a green light when it comes to regulatory, aspect of it. So we'll round it up with meme coin. What is it? $3. It's down. And Tim Shea, if you're still there, you told me about this meme core situation. You warned me about it. It's down across the board, and you were right. That holdership is a little shaky. This thing is almost down 19% within a 24-hour period. Huge dumpage, even within an hour. People are dumping this, and you were right, bro. You told me about the nuances of the tokenomics and everything that was going on with that. The holdership, large wallets. And you were right, man. So I appreciate that warning, brother. It's kind of panning out, just like you said. not good. So Litecoin, which was a fork as well, a Bitcoin is saying, but it's doing its own thing, $55. World Liberty Fund, this USD1 stablecoin, we'll talk about it. Main focus of ethics when it comes to Clarity Act. I don't know how long this is going to last, but we'll round it up with AVAX at $9 cruising, and SUI is cruising to at 92. I think it's going to get back to its actual, glory days. I think it's going to do. I think they did another upgrade for that, but I think SUI is going to be okay. And I want to mention this one too. A lot of people don't talk about this one. This is the one that's basically Japan has adopted this particular chain. I think it fell off to 93. The C chain, SEI. This particular chain, guys, I don't know if you understand about what's going on. It's a huge ecosystem, a huge situation. Japan has basically adopted this particular blockchain. So who knows what's going to happen with the actual price of it. Is 5 cents. Do your research on that adoption, that integration. They're going to be using this technology heavily going into the next 5 years. So, and it's $412 market cap. You know what I'm saying? Do your research, not financial advice, but a number 93 on the actual scale. And I want to hand clap the market because I think we're going to see better days. There is a chance of a late bull movement. Okay. If you get what I'm saying, post language, probably in June if we get it past, but hand clap for the resilience too as well. Let's go ahead and get into a little bit of news here. So we're at the news page here, and we're going to be talking about, we talked about Cathie Woods, and we're about to get into this Chainlink situation as well. But I would like to actually talk about this particular one right here. Now, I mentioned this, so we might as well get into it now. Top Bitcoin dev is launching a new BTC fork, giving holders new eCash. Now, a lot of people are getting confused with the eCash that's actually listed. That's not it. Okay, that's old. They're not talking about that. And I think this is a confusing part about this particular fork. This is a new BTC fork, and I think it's going to stick. Now, it's not the eCash that you see now. That's I think at around 100 and something K market cap, because a lot of people are trying to load up on that. That's not the one. And briefly, I want to talk about this because this proposed fork is basically, it's going to leave BTC untouched, but holders may still face new decisions over claims, custody, and Satoshi Link coins. And I think the focus is to actually redistribute those coins essentially, because when they do this, I believe that wallet is, I don't know if it's going to be frozen, but I think they're going to be moving those coins and they're going to be just redistributing those in a weird way. If I'm wrong, let me know, but that's the way I understand it. And there's other things as well with this particular L1, because it's going to have support from L2s as well, like I told you earlier. But I'm going to read this briefly because a lot of you don't know what's going on here. It says April 24th was this actual announcement, which was kind of a silent announcement. And there's a post too as well, a really scary post about it too. Now, this particular new chain was described in basically would copy Bitcoin's history, guys. If you understand what I'm saying here, giving holders basically one eCash for every Bitcoin they hold. So you'll be able to actually move your Bitcoin into this situation. What's going on, Selmo? Talking about this Bitcoin fork, man. 1-to-1 split on this particular situation. Now, I don't know how this is going to fragment BTC holdership. I don't think it's going to do it very much, but it's been a while since we've seen a new fork proposal of this nature that was very serious coming from the team. They're doing it. And I think this is a BlackRock push. I've been following this for a year. And I knew that they wanted to fork this Bitcoin essentially. And I knew it was coming, but I didn't know it was going to be this hard, right? A complete copy of the history. So it's going to be the same algorithm, Shay 256 with the D. I think it's going to be a drivetrain style as well. You're going to have side chains. You're going to have the L2 functionality as well. 7 in development right now. It's very interesting what they're doing. And the timing is very interesting as well. And this launch is slated for this year. It's going to have a Bitcoin core-like layer. You're going to be able to mine it, all that stuff. So, I'm thinking about the miners too. Like, how are they taking this? Because there's going to be an entirely new node as well. So for the ordinary, listen to this. For ordinary Bitcoin holders, the practical question is more specific than in the backlash. The fork can create a new asset, which it is. You're going to be able to take your Bitcoin and get a 1-to-1, swap on this. A even swap. No BS, right, involved. So the fork can create a new asset, obviously, new confusion. This is what's happening already. And new operational decisions. While BTC balances remain governed by Bitcoin software, Bitcoin consensus, and Bitcoin private keys. In a later clarification, Shatorts, that's how you pronounce that, devs. One of the lead devs there, said the current eCash plan would give Satoshi Nakamoto's 600,000 eCash rather than 1.1 million eCash. Now, that's the fucking problem that everybody's having. I can't believe I just cursed, but F-bomb, trucker's mouth. I'm sorry, guys. That's the problem that people are having. So, and I'm gonna read that again. eCash, this is crazy. Even reading it out loud is like, what the hell are they doing? I'm gonna read this. All right, so you're talking about 600,000 eCash is going to be replacing the 1.1 million eCash. And we're talking about that 1-to-1 in the Satoshi wallet. Damn. He also repeated that BTC balances are untouched. So there's not going to be any funny business there. By the eCash and that moving in. Let me get back into this. Now, by eCash and that moving BTC, I'm sorry, I got a little befuddled there, always requires Bitcoin software plus relevant Bitcoin private key. So they're saying basically, chill out, guys. The core is going to be untouched. There will be a fork and there will be a 1-to-1 if you want to move. If you want to move and join the new L1, you kind of hang out, you want to participate, you can swap your BTC 1-to-1 for this eCash. Now, the thing is, they're meddling with this Satoshi wallet, guys, and this is the first time I've ever seen this wallet touched and altered, contorted, whatever you want to call it. This is the first time I ever seen them actually trying to move this wallet and mess with the actual contents. Now, is the incoming, I don't even want to say this, but did the quantum threat really induce this? Is it really shaking up this foundation, or was this planned years in advance? It didn't matter about the quantum threat. They're just doing this because they wanted to do this. Is it BlackRock based? Are the institutions, moving this? I know Charles Hoskinson talked about a completely different fork. Maybe this is the fork he was talking about. He was very upset about it. He did a 20-minute video on this, screaming about this. I think this is what he was talking about because he thinks it's the stupidest thing they could do. By the way, he has the solutions as well. I think it's midnight. He's already got a solution for it. But he didn't like this as well. He lashed out at the team about this. Maybe this is what he was talking about. But, this looks like a redistribution plan for the wallet to get it out of the crosshairs of the quantum threat and to, do another fork. And, because I think Bitcoin Cash was the latest one, I believe. So, but this is the first time I've seen the Satoshi wallet in the crosshairs. They're actually going to be moving things, and this is going to be a slight redistribution. And this eCash plan will give, I repeat, Satoshi Nakamoto 600,000 eCash rather than 1.1 eCash. So what's going to happen? Is that a 600,000 1-to-1, swap of the Bitcoin? Where's that Bitcoin going to go? I don't know. It's really confusing. But I just want to jump into that a little bit, and here's a little pictograph of it. They're really doing this. This is where eCash holders risk, lives here. Bitcoin history copy. The entire history of Bitcoin is going to be copied into this eCash chain. BTC balances will be untouched, but you're going to get a 1-to-1 ratio allocation. BTC keys still required. New chain, new market. BTC consensus unchanged, but on the e-chain side of it, replay and split checks. Support and liquidity still open. No claim action needed. So it's going to be automatic migration, I believe. So there's a Satoshi linked eCash allocation. They're going to give Satoshi 600,000 eCash with the 1.1 M Satoshi pool. What the hell is that? Listen, man. I don't know what you guys think about this, but it's happening. Here's a little bit more about it. The proposed chain starts from a familiar hard fork mechanic. At the fork height, Bitcoin history would be copied into a new network. God, I wonder if they're going to have to pause the chain for this. Probably so. It's a hard fork. I believe they will have to pause the chain. Bitcoin is slow as hell. This is going to be interesting. A wallet holding here's the scenario. A wallet holding 4.19 BTC at the split would have 4.19 eCash on the new chain. according to one of the founders' announcements, holders could keep, sell, or ignore those particular coins if the new chain launches and if they can safely access them. So I think a lot of people are going to be selling these coins, these eCash coins. The base chain pitch is intentionally close to Bitcoin. Sorch described the eCash layer 1 as a near copy of Bitcoin Core. So we basically copying and pasting with slight alterations. Mining with the same SHA-256Z algorithm. So it's still going to be, this particular situation is still going to be in the crosshairs of the quantum threat, because it's the same algorithm, same copy. It's just a copy of it. New lipstick on the pig, essentially, with a one-time difficulty reset to its minimum value at launch. That's interesting as well. He also said the chain would activate BIP. There's going to be the Bitcoin Improvement Protocol 300 and BIP 301 through CUCSF, a route meant to bring drive chain style sidechains into each chain without changing Bitcoin itself. So that's going to enter the 7L2s there. So man, they're about to do some really crazy fringy things to Bitcoin right now. I don't know how you guys think about that, but this is what's coming to Bitcoin, to a wallet near you. I don't know how you guys think about that, but this is coming. This is crazy stuff. Crazy stuff. So I don't know. What do you guys think about that? Are you ready for it? Are you going to be buying eCash? It's going to be a lot of dumping. So I think you're going to hit a floor there. Is it a good buy? I don't know if I'm going to be buying eCash. It's probably going to hit the floor pretty hard, but I digress from that. Let's go ahead and get into this. This is what I want to talk about. This is beautiful. So let's go ahead and get into this Amazon situation. AWS, and we're talking Amazon Web Services, integrates Chainlink's 3 services. We'll talk about those 3 services as April rolls out. It's going to be the actual roll, but it's already rolled out. Tokenized finance stack. We're talking about proof of reserve, tracing, data tracing. A lot of the devs. We'll get into how this is going to help the developers too as well. I want to really dive into this, and I hope you're ready about this, because this is a good bridge for other tech that's in the space to actually move into the real world. Chainlink has officially graduated, guys. It has officially graduated, and a lot of holders of Chainlink, they're wondering about the actual price. That is going to come. That is actually going to come. You're going to have to still wait on that, because this is in its infancy stages. But I got to tell you, when that actually, the whiplash effect occurs, it's going to be dramatic. It's going to be absolutely dramatic. Now, the actual deal, let's talk about this, because April 24th was a major situation that occurred. Welcome to the show, LMFG. I don't know if you got time. Let me get that link in the actual, let me pin this link up for you, brother. I'm gonna pin this up at the top. It's a stage link here, and then we'll get into it. And you're right, shows up on the fork. I'd like to get your take on that too as well. But we're about to get knee deep into this Chainlink situation, because it is beautiful. That's anybody that wants to come and join the stage, you are welcome. I pinned that up at the top, guys. So, and all you have to do is click that link up top, and you can get in it and join the stage. Now, so let's talk about this, the benefits and what's going on here with this Chainlink situation. Now, again, April 24th, huge day. All we need is language to couple with this, and the bull run is in. Probably the biggest one you ever seen in your life. April 24th was huge. Now, this became the most important day in crypto, as far as I'm concerned, when it comes to moving this tech into the real world. All right, so there's 2 massive catalysts here. We're still waiting on the Clarity Act. We're going to get that, right? But the Chainlink AWS integration was huge. Now, here's the thesis. 2026 is the year crypto moves from speculation to infrastructure. In that implementation of infrastructure, this beautiful tech that we've been investing in and watching grow for all these years, some of you many years, it actually happened on the 24th. So that was a monumental day. Now, what exactly happened was Chainlink Labs listed 3 oracles. We're talking those oracles, those services directly on AWS's marketplace. Now we're talking about data feeds, which is going to be price and market data tracing, data streams. We're talking Chainlink, that infrastructure, low latency, which is what they didn't have, real-time data for high performance trading. Okay. Now the big chunk of beautifulness is what I like to call it, is this proof of reserve that landed on the AWS. Verifiable backing of stablecoin activity and tokenized assets. Now RWA is about to hit this running. This is exactly what RWAs needed, was to be implanted in the real world inside of a marketplace like Amazon, this infrastructure, AWS. You have this bridge that was needed as well. It was absolutely necessary. And we're talking about Chainlink, hence the name Link. That bridge was absolutely needed. It has finally been battle tested, stress tested profusely within the past 2 years. It is ready. It has been implemented. And this is beautiful because this proof of reserves is where it meets the road. And I'm talking about all the integration when it comes to stablecoin activity, payments, being able to use crypto on these type of platforms. You have this bridge now that's implanted. This particular system allows this to run seamlessly and smoothly. And it's not just going to be AWS. This is the first domino to fall. This is what you need to understand. This is just the first domino. I want to hand clap this. This is beautiful. It gets even better. But we're just getting started. We're in the infancy stages of it. Now, why does this actually matter? This solves the Oracle problem, guys, inside the world's biggest cloud platform, and they did have an issue there. It's not an issue anymore because of this beautiful system that Chainlink, that the devs have built and have perfected. There's your problem solving that a lot of tech, I'm telling you, the devs that are building right now and perfecting their tech and whatever they have going, you better be able to solve real world problems, because this is what Chainlink has done. This is what they presented, and this is how you get implanted and integrated into infrastructure. You got to be a problem solver. You can't be copying and pasting things that already exist, especially if what you're copying and pasting does not solve problems. You're just copying and pasting. You're being redundant. You're being a redundant, non-problem solving agent. This is what you're doing. So you have to do what Chainlink has done. You got to perfect it, and then you have to present it. And then once you accept it, it's off to the freaking races. This is what Chainlink has proved, right? And we knew it was going to happen. By the way, they're implanted in our government as well. The government is using Chainlink as well. This thing is about to explode. This is what every holder should be proud of, and this is what you've been waiting on. And I think a lot of the like Quant, Aptos, there's some more out there too that kind of have the same thing going on. They're going to be looked at as well by other entities. It's like, okay, AWS, they're using Chainlink. We can use Chainlink, but there's some other ones here too that we can leverage, that we can plug, because they are ready. They have problem solving tech as well. Let's look at them. I would advise you guys to do your research on platforms that are either mirroring what Chainlink is doing or actually building even more problem solving, infrastructure, because those are the ones that are about to take off. Those are the ones that are going to be plucked out of the pool, right? Because they're solving problems. This is what AWS needed. This is great. So enterprises will no longer need to be blockchain experts. Let me explain what that means, because not only Chainlink is providing these beautiful oracles, these services, these problem solving services, but they're actually making it easier for enterprises to actually interact. They've simplified the situation as well. So there's another problem solving agent that there's providing simplification, simplifying the actual nuances, simplifying the bridge over into actually using this beautiful tech, right? And this is said a lot in the space. A lot of these entities and enterprises and these brick and mortars are going to be using this tech, and they're not even going to know it. This is exactly what's happening here with this integration. It's still going to look the same. AWS, the front end, the UI is still going to look the same, but the back end has changed dramatically. There's an integration in the back end that's beautiful, but a lot of these enterprises and these developers are not even going to know what's going on in the back end, but they're going to be using blockchain tech that has been built within this space. They're not even going to know it. This is how smooth this integration is. We'll get into the nuances here in a little bit. They're going to be able to use familiar AWS building tools and infrastructure, but in the back end, you're going to have this beautiful Chainlink infrastructure that has been integrated. Another hand clap for this. This is so bullish for Chainlink. This is so bullish for Chainlink, man. And I have to tell you, if you're a holder of Chainlink, you should be very happy. Now, this is an actual quote from Simon Goldberg. Quote, making Chainlink's data standard available on AWS Marketplace, unquote. They're very stoked about this, obviously. Who are the beneficiaries? Let's talk about this, because banks obviously are going to be a huge immediate beneficiaries for this integration as well. Asset managers, fintech, you probably didn't know that, but fintech, and I'm talking tokenized funds, RWA, stablecoin activity, and on-chain derivatives. It's about to explode. It's about to go bonkers. Now, of course, we need Clarity Act passes, and we're about to get to those roadblocks. Of course, we're going to need market structure. Okay, that is coming. We have 7 senators in the Senate, and we'll tell you what they're upset about in a little bit. We're about to get to the Clarity Act. But the immediate beneficiaries are obviously going to be banks, asset managers, fintech, big time. And that's just building that tokenized fund atmosphere. It's going to be so easy to do that now. RWAs are going to fly in these type of marketplaces. They have the bridge now to where, and you're going to have decentralized applications that are going to be able to move into this arena as well. Because a lot of the D apps are only servicing us. They're only servicing everything that's internal right now. Those days are coming to an end. And a lot of these D apps, especially when we get market structure, especially when we get the Clarity Act passed, they're going to explode. And a lot of these D apps have actual synthetic coins and tokens that represent their said abilities as well. So you need to do some research on those. These are very interesting times that we're about to enter. And I think the space is maturing. This is the first catalyst. This is the first domino that has fallen. And a lot of you are focusing on this because of all the noise. I get it. But this was so monumental, what has happened here. This is why I'm doing a deep dive on it. Now, again, those beneficiaries, immediate beneficiaries, are big, and it's really, really big for the RWA sector, which is growing. I was looking at DeFi Llama the other day. I was looking at the market cap when it comes to tokenized assets. Those funds are growing. The RWA market cap is, I'm talking global, it is growing very quickly, even in this climate, right? Stablecoin activity, crazy. I just told you about Cathie Woods reassessing their actual outlooks on the stablecoin activity. Look at what has happened here. When you talk about the proof of reserve, it's going to make it very easy for those stablecoins to fly now. Chainlink is going to be integrated into way more entities. This is just the first one that's well known. Now, why is this bigger than most people realize? Let's get into that, because tokenized stacks are now going to be actually enterprise ready, guys. I don't want to get too techy, but listen to what I'm telling you. AWS plus Chainlink equals plug and play activity when it comes to institutions. Very easy integration, very understandable. And again, we're simplifying the integrations for enterprise, for tokenization stacks, RWAs. Very simple integration, very easy plug and play. That is so important going forward. So if you're building anything of this nature, you better make sure it's simple. You better make sure those UIs are very understandable, very easy for the layman to interact with. You better make sure you got to follow this model, man. It has to be plug and play. Because a lot of these institutions, these enterprises, they don't know what they're doing. They don't understand this tech. So the simpler you make it, the more easier it is. And this is what Monad has done, made it very easy to interact. This is why Monad is very attractive right now for developers. It's plug and play. It's EVM compatible. There has reverse compatibility there. It is extremely plug and play activity with Monad. That's why it's very attractive. This is what has to happen, and this is what has happened when it comes to this integration, this Chainlink integration into the real world. Again, Chainlink has graduated. It has graduated. It's finally graduated. It is out. It has received this, final diploma. It has been implanted in the real world, and people are starting to recognize this. And I'm not sure if that ETF has actually, Benji Frame is on the right path. And I hope they continue. They are on the right path. I will agree with you. The Frame is on the right path. Let's continue that, I got off track a little bit. So, but yes, plug and play. Now, when it comes to the acceleration of RWA, this particular narrative, which I always talk about, it's huge. It's very huge. Bitcoin is the topic. Middle East is the topic, but we're talking about crypto and altcoins movements here. The RWA narrative is huge. And BlackRock, Franklin Templeton, these type of entities, they're already experimenting with this. They've been experimenting with this and implanting this. JP Morgan, all these big, huge entities. This is what they were waiting on. This form of integration, because now they're moving from experimenting into getting involved and actually interacting. and they're releasing those experiments. They're going into their alpha mode, essentially. They're ready. This is interesting what's going on, and these things are happening very quickly. But everybody's focused on Bitcoin. I don't know about you guys, but I will be focused on these particular altcoins that are in these sectors that we're talking about, that are either mirroring what Chainlink has done or focused on this particular narrative, which is about to explode. Because a lot of these entities like BlackRock and Franklin Templeton, I think that would be more advantageous for them to leverage what's here, if it's here. Now, if they have to build their own tech, then so be it. But if I'm BlackRock, I'm looking right now, I'm like, what's in the space right now that I could leverage, that I could, build up on or enhance or pull in and use, just like what Amazon did with Chainlink. Do your research on that, because that's what you need to be putting into your portfolio. I'm not joking. So let's get to the token, because this is a bullish flywheel for the Link token. All right. Huge. More adoption, obviously, is coming. More data requests within this particular protocol. That is already on the way. More revenue for the network. That is coming. Higher token utility and demand. That is going to actually, it's going to blow through the roof. And this is what a lot of you holders need to understand. We're talking about the Link token here. You might as well call it a coin at this point, right? It has use case already, but this type of use case that's coming for this coin is crazy. It's going to be phenomenal in the demand of this particular token. All right, it's going to be phenomenal. More revenue for Link. Obviously, that is going to be a windfall. More data requests, more pull for the network, and it's ready for it. Obviously, it's been stress tested for years. They've been, enhancing the actual internals for years. So the adoption is coming. So this is a huge flywheel and very bullish for Link. And I think for altcoins, this is a huge catalyst for altcoins that are linked to infrastructure of this nature, like Quant, like Aptos, like the others. There are many others. I just hope the devs have been upgrading and they're keeping up with what's going on here, what has happened here. Hand clap for this situation. Hand clap for Chainlink. We're about to move on, because I don't want to harp on it too much, but I got to tell you, this is so freaking bullish for Chainlink. And, I can go on and on about this particular situation, but we must move on to the Clarity Act, because I got to tell you, this Clarity Act thing let's talk about it. Let's go ahead and talk about it, because, I want to get into the actual ongoing issues, essentially. And this is going to be a little deep dive on it. But I think this is where we need to go. By the way, stocks don't look too good, guys. The NASDAQ is actually cratering right now. It's almost 400 points down. Let's go ahead and give you a brief look at that, because this is correlating with our market, unfortunately. And this is a decent barometer when it comes to the buyership. Mag 7's down. S&P's down, Dow Jones is down, not very, very much, but I pay attention to the NASDAQ because it's almost down 400 points. Now, futures, you don't even want to know. The Nikkei is like in crash mode, but I want to pay attention to the commodities, because you have crude oil that's moving back up to the $100 range. Brent oil is up over $104 per barrel. Now, I want to tell you about this, because you're looking at futures. We're talking about futures prices. This correlates with the crypto market, guys. This is why Bitcoin is shaky right now. That rotation is negative. This affects alts. Unfortunately, this is what's happening, because you have a spot price that has decoupled. There's a divergence there when it comes to the actual futures and spot. Okay, we're talking $30 divergence here. Okay, so when you're looking at Brent, it's actually a spot price of $135 per barrel. Okay, and we're talking about the price that the actual buyers are paying in a real world versus futures. There's a huge divergence in that. We didn't have that. This is something new that I'm noticing with oil. There's a divergence there between spot and futures. $30. So when you're looking at crude WTI, that actual spot price, right, is around $112 versus what you're seeing with the futures, which is 99. So it's a very fictitious look. So what I'm trying to tell you is, I don't know who's playing around with this, but I got to tell you, this is a dangerous game when you're playing around with these numbers like this, because the spot price is telling the tale. It's actually telling the truth about what's going on. The futures, this is a complete lie. This is not the spot price. So a lot of people are thinking, it's going back down. No, it's not. No, it's not. And this is affecting trading. This is affecting buyership. This is affecting credit. And speaking of credit, the bond market, not good. And there was I saw this earlier. Let me get back to this. Because apparently, this is the actual consensus here. Bitcoin, let me read this. I'll read this because it has a lot to do with what I'm talking about here. The bond market is going to dictate. This is what the consensus is going to be dictate Bitcoin's comeback to 80K. So if you think there's no link here, it is. It is a link, unfortunately. Oil is linked. It's freaking crazy to even think that, but this is a consensus, right? So, take it how you want it, but this is affecting everything. You got a 10-year, it is up almost 1%. 30-year up 0.16. That 10 years dictating mortgage rates. No one's buying a home right now, but I'm just saying everything, the economy is not good. And I think the Middle East situation is overclouding the fact that the state of our economy is cratering, and that is affecting buyership. So when you look at Bitcoin, it's all ETFs. That's why I always say this. Retail is not buying crypto right now. Retail is selling crypto for survival. 401ks are getting bled for survival at this point in time on ground level. If you clear out the fog, the war fog, all of this, stock market fog, which is fictitious barometer here. And you look at these numbers, it's not good. You look at the bond market, it's not good. You look at commodities, you look at oil going back up well over $100. Spot price, $135 for a Brent, $112 per barrel for WTI. Not good. And I think the stock market is starting to react correctly. Crypto, mixed bag. You have a divergence between alts and Bitcoin and Ethereum. They're going two different ways here. You have an RSI score that's showing me, and I'm looking at the chart, that people don't know what to do with their crypto. They're just holding. Some people are DCing in the proper, sectors. But, a lot of people are paralyzed now in the cryptocurrency space with their portfolios. They're seeing losses, but they're paralyzed. They don't know what to do. So they're holding. We'll see. We'll see what's going on. We'll see what's going on. So Clarity Act. Let's talk about this, because this is a huge catalyst that we need to actually follow through as well. We did get the passage from the House, but that doesn't matter because the Senate has put a massive roadblock in front of this. And there's some factors here we're going to talk about. And I don't think it has a lot to do with the stablecoin yield at all. I don't think it has a lot to do with that situation at all. So let's go and get into this Clarity Act update. Final push. This is what's happening. This is very bearish, what you're about to hear, but I got to tell you the truth, because you're probably not hearing what's really going on. Now, we did get the House passage. A little history here. We did get the House passage, right? This is around 2025, July the 17th. Bipartisan, really, really nice movement there. Really nice movement. But that doesn't matter, because we are at April the 28th, 2026 in the Senate Banking Committee with, bless her heart, Senator Warren screaming out the top of her lungs, ethics. We're not signing anything until we deal with the ethics part of this bill. We don't like it. Now, there's some issues with the blockchain governance as well. We're going to get into that, but I'm going to give you the full Monty on this, because it's not just about stablecoin language. I've had no confirmation on this, but from what I've read, we hadn't seen the newest markup, which bothers me. It must be really bad, because it's not about stablecoin language anymore. They've actually come to a decision about that. Okay. Here's the thing. DeFi provisions and developer protection, that's a major argument right now. And securing every Republican's vote on the actual committee. You have 7 that they're sitting on their hands right now. There's a massive industry pressure. I'm talking over 100 firms, guys, that want this to be done today. They're sending letters like crazy. We already know Donald Trump is very busy right now. As far as he's concerned, this is back burner activity. He's leaving it to the Congress to figure it out, and they're not doing a very good job. So if this doesn't move by May, it's done. It's a wrap. And this could be delayed all the way to 2030. No joke. I was thinking 2029, 2027, but no, they're saying 2030. That's going to be a major bearish flag for altcoins. Bitcoin could still fly. But I don't know. You got this fork coming up. So, this could be two bearish flags. The Bitcoin fork could send a wave of fear across the market very easily. And then the non-passage of Market Structure Bill, Clarity Act. That could be a double whammy for the space. And God forbid complete war breaks out and you have major infrastructure destruction in the Middle East. Three bearish flags that can send not only the cryptocurrency market tumbling, but stocks as well. Commodities, oil can go through the roof. It's I'm not going to say Armageddon, but pretty close to a tragedy that could occur if these three flags start waving at the same time. But I digress from that. That is very, very bearish. Let's get positive because I think we're going to get this passage. They got to come to a consensus here very, very quick. There's no executive order that can happen. And I believe, and I'm going to tell you what's going to possibly stop it, because I don't think, Donald Trump is going to like this at all. So what passage actually means, guys, is clear SEC and CFTC jurisdiction, mature blockchain, activity for test tokens as well. Federal regulators will get clear language when it comes to exchanges and brokers. Safe harbor for DeFi will be clear because there's some issues there. We'll talk about that in a little bit. And a much stronger institutional confidence. And that is going to spur not only what's going on with Chainlink, but it's going to spur even more activity like that, more real world adoption. A lot of enterprises, a lot of institutions in brick and mortar they're going to feel safer when it comes to leveraging the tech. They're going to feel safer, and it's going to be a complete clear bridge for a lot of this adoption, essentially integration that we've seen happen, and it can mirror that of what happened with Link and Amazon. So Mr. Tim Scott is basically saying this is what's out. Now I want to give you the nuances of it because it's a little crazy what's going on here, and I'm trying to make sure I got this. Okay, so let's get into this. Now we're going to talk about the three situations. Now, stablecoin rewards, we're not going to get into that because I don't believe that's an issue anymore. I don't even hear anything coming out of Coinbase right now about it. I think they lost that fight. It's probably going to end up being a reward system, but you're going to have to be, you're not going to be able to actually hold and get yield. And if you notice, Coinbase's yield has dropped dramatically. So I think they already got the news. You're going to have to move those stable coins. There's going to have to be some form of activity. And I talked about this in the previous live, the actual stipulations. These are real world requirements that you see in the real world when it comes to credit cards. They're just going to adopt that, their reward system. But you're not going to be able to just hold and reap rewards. There's going to have to be some activity. So I think that is done. What we have here is Blockchain Regulatory Certainty Act issues and ethics issues that are going to derail this Clarity Act, I believe. Now, this includes section 604. Let's go ahead and get into it. Now I have the data here and also my takes on it. We're talking to SBC and ANS, which basically clarifies the software developers and infrastructures that provide these said DApps clearance. Let's talk about this because we're talking about the developers, these decentralized applications that are actually considered money transmitters under the Bank Secrecy Act at this point in time, which that has been contorted. We're talking about that House version. So that has been contorted, and there's an actual hole here, a loophole. This is what these 7 Republicans are not really happy about. As long as the actual providers of the infrastructure, we're talking money transmitters, DApps that are, moving money, these particular DApps that are labeled crypto companies, essentially. As long as they don't hold or custody the user's funds, they're not money transmitters under this law, which absolves them from any type of liability. Okay. The crypto industry, this is their take on this. They consider this provision a red line and views it as essential to keeping open source development onshore. I don't really believe that because I think it's still going to flourish if they take this out or not. But this provision is opposed by law enforcement groups and has drawn bipartisan pushback from the Senate Judiciary Committee. All right, we're talking about Chair Chuck Grassley, Republican, ranking member Dick Durbin. He's going to be the Democrat there. You have Chairman Scott and ranking member Warren, Senator Warren, Pocahontas. And there's others as well. They're against this. They want to change it. This is a roadblock that no one's talking about. They want this to be changed. It shouldn't matter if they don't custody or control users' funds. They should be held responsible for or be liable for any mischief, regardless of the situation. And I don't know. How do you feel about that? Should devs be absolved, especially in the DeFi world, which is pretty much wild, wild west. There's no regulation there. At this point in time, you have CeFi, which is heavily regulated, but DeFi is not. But they do the same thing. We'll see how this goes, because this is a roadblock that no one's talking about. Everybody's talking about the stablecoin situation, but this particular BRCA Section 604. There's a number, and this is a bipartisan movement here, a number of senators that are like, nah, this is not going to fly. We need to change this. We need a full liability for these infrastructure providers. This is what they're calling these devs that provide these, or software developers, essentially. You devs that are, developing these money transmitters. They want you to be fully liable. And if they get their way, you're gonna have to show proof of reserves. Infrastructure, stability has to be proven. You're gonna be regulated. This is what they want. So this is a big deal too that no one's talking about. Everybody's talking about the stablecoin yield. Now, I think they solved that. I don't think that's an issue anymore, and they don't want to tell us. We're waiting on that new markup, but I don't think we're gonna like it. And I believe what I'm seeing that's happening with Coinbase and that yield that keeps moving down towards 2%. That's writing on the wall for me. So this is also, the senators are saying, this is also going to hinder the actual policing of the space when it comes to these money transmitters. It's going to make it hard for the lawmakers to prosecute because of this legal void that exists right now, that basically absolves any liability for these infrastructure providers or software developers of these said money transmitting platforms. If they simply don't custody or control the user's funds, they're absolved. i.e. mixers. This is interesting. And I'll read this to you. Though the particular group is warning that this particular provision will create a blind spot. This is their actual retort. This is their stance on it. It's going to create a blind spot for the state and local law enforcement agencies that rely on financial crimes enforcement networks, registration information, all that good stuff, to trace money flows and or to investigate the potential of money laundering within these said money transmitters, terrorism financing, and drug and human trafficking as well, which that's pretty interesting right there. Separately, Senator Catherine Cortez, who's going to be a Democrat out of Nevada, a banking committee member, and former Nevada Attorney General, there you go, has been pushing for changes to this particular situation to address law enforcement concerns. The National Sheriff's Association is involved in this as well, and the National District Attorneys Association have also weighed in as well, warning that the bill's DeFi language risks limiting prosecutors and limiting their particular abilities to pursue financial crimes in particular cases that could be levied towards these said money transmitters or these infrastructure providers or developers of these money transmitters. Now, here's the actual retort from the crypto industry. Here's the counter argument. And it is that the BRCA does not alter anti-money laundering statute under 18 USC 1956 and 1957, if you want to check that out. It does not limit prosecutions for fraud or sanctions evasions, doesn't promote sanctions invasions or the invasions of said sanctions, and simply aligns the criminal code with FinCEN guidance and the DOJ's own recently articulated position that was actually laid out in August of 2025 speech by the acting Assistant Attorney General Matthew Galito. So as far as the crypto industry is concerned, they don't agree, and obviously they don't agree because this is a roadblock that no one's talking about that's stopping the Clarity Act. market structure patches. This is a big one. And you have a lot of law enforcement associations that are saying, you know what, you got to change this. And you know that's where that money's coming from. And a lot of these senators, they're trying to get reelected. So this is why they're holding out. You got 7 of them. No one's talking about this. Now, here's the big chunk of the holdout. This was big too, this BRCA situation, this fight when it comes to what I just told you. Now, here's something that I think if all gets passed, Donald Trump is going to veto this. Now, this is what is happening. This is what's stalling out the thing as well. And this is a big layer of the delay. Ethics. We're talking ethics. And, you know, most importantly, this is a Donald Trump law that they're trying to install in this Clarity Act. Let's go ahead and call it like it is. It should be called the Trump law. Now, I'm going to read this right here. Ethics part. This is the big cookie right here. Democrats have consistently sought to include provisions barring senior government officials, elected officials, and their family members from holding financial interests or profiting from crypto assets while in office. This is the Trump law. This is the Trump law. And this is what's essentially going to derail this whole situation. Along with this, the blockchain situation that I just, the actual act here, the BRCA, that's pretty big too. But there's 2 things that are actually really holding this thing up. And these are huge brick walls. Let's continue with this because this is the Trump law. I'm sorry. It's got Trump written all over it and his family written all over it. And there's some congressmen as well. But I just see Trump written all over this. Now, this issue is aimed squarely at the Trump family's involvement with various cryptocurrency projects and has been a Democratic priority throughout the negotiation process. It did not make it into the SBC January situation, but multiple Democrats, and we're talking about the senators, the 7 of them, have signaled that they will push for ethics amendments. This is what is going on right now during a committee markup or on the Senate floor. This is unlikely to be a deal breaker in the committee. I disagree with that because it's already happened. But it could become a flashpoint during floor debates. Now, and again, this is the opinion of the ethics. I've given you my opinion. This is not just the only roadblock though. Now, where any senator can offer amendments and where Democrat votes are needed to reach 60. So they're saying this is going to be a floor screaming event. I disagree because it's already fractured and it's already put an additional roadblock into passage. We had Senator Loomis came out the other day. Everything is good, guys. We want to get it out by May. I don't think so. I don't think that's happening because of this ethics issue. They're going to be pushing this very hard. And you got 7 senators that are like, you know what? We're not touching it. If this Trump law, if this Trump amendment, and basically this is what it is. This could, and by the way, this could derail everything that Trump has done and his family has done. World Liberty Finance can be completely derailed if this becomes an actuality. And with the push coming from the institutions, over 100 firms, this could very well be pushed through. Because a lot of money is riding on this legislation. A lot of adoption is riding on this legislation. You have ETF funds that haven't even been launched. I'm talking baskets, altcoin ETFs that are waiting on this. This could very well pass through. And as far as the situation that I was telling you guys about earlier, BRCA, I think they're going to fix that. I don't think that's going to be good for the developers, though. I really don't. A lot of this is going to be ramrodded through. And the ethics situation, there's going to be a soft version of this that's going to be rammed through. I'm sorry. It's going to ram through. Now, those are the 2 that I want to talk to you about. And this is what's holding all of this up. And it is what it is. We'll see what happens. We'll see what happens. But this is a major issue that's going on here as we move back to the Bitcoin. $76,000. What do you think about that, guys? I want to know your thoughts on that. If we don't get Clarity Act, is this a deal breaker for you? Are you leaving the space? Is this going to be such a downer? Because I believe the market is going to dip once the word is out. It's not going to happen. We're rolling to May because we're almost there. April is moving very swiftly. So as we roll into May and we don't get the Clarity Act, war breaks out. Bitcoin fork, fights break out. This market could very well, and I'm just being realistic with you guys, it could very well crater. very, very fast, very quickly. $50,000 Bitcoin, I don't think we're going to see that. But a realistic approach to a new floor, I think we will. 60K, I don't think that's out of the question. Now, will we see OTC buyership? Of course. That's going to create tiny amounts of FOMO across the board. Little retail may trickle in. Institutions, they're going to buy. OGs, they're going to buy these dips. But I don't think you're going to see 80K at that point in time, because it'll be too much down pressure, too much turbulence going in the wrong direction. So that is pretty much, we're going to get into the giveaway before we get over. That's pretty much going to wrap it up. That's, my final thoughts. I'll give you my final thoughts on this before we get to the, when it comes to this. Infrastructure and regulatory passage, absolutely needed. As far as what Chainlink and Amazon did, I think that is bullish for altcoins. And I think that's going to spur a lot of development going forward, essentially. My market impact and price impact last thoughts. I'll give you this real quick. As far as Chainlink and AWS, direct tailwind for Link, utility plus adoption narrative is bullish for that path. That pathway is wide open for Link. You may see Link decouple. I'll give it 4 weeks and it's going to decouple from the entire market and start moving very, very quickly. You can bookmark that. Give it 4 weeks and you're going to see a decoupling effect when it comes to that token price. Clarity Act passage, massive green light for Bitcoin, Ethereum, and the entire altcoin sector, but we got to get it passed. We got to get it passed. It's a major, major catalyst for altcoins and movement and adoption as well. My bull case for 2026, it's like what I told you guys. Regulatory clarity plus enterprise infrastructure equals the two missing pieces that we have for the next leg up. We need that to happen. If the Clarity Act stalls, which I believe it will, it's going to be short-term disappointment, but this AWS deal is going to still stand out. And I think we're going to see that usher in more adoption. It's not going to be a major mega pump because of the stalling out of the Clarity Act, God forbid. But you couple that with all-out war in the Middle East, and it's a recipe for a really bad year when it comes to investments, when it comes to commodities shooting to the moon, when it comes to gold, because gold is going to spike, guys. If we get official war now, apparently there has to be some type of declaration today, or it's going to be deemed illegal conflict. So we'll see how that goes. We may get a massive pullout today because this is the due date for Donald Trump to legally declare what's going on in the Middle East. We'll see what happens later today or tomorrow. We'll just have to see. So, as far as your portfolio, you got to do, that's your choice. You have to make that choice. I would definitely be accumulating Link. Not financial advice. This is what I'm doing. I'm sharing with you what I'm doing. I'm accumulating more Link as well. But core assets that make sense, especially heading into the 2026 late summer, if we get passage, I will be focusing on that, guys. So do your research on those core assets that are not only linked and surrounded and kind of like mirroring what Link has done in that infrastructure, but surrounded by the tokenization narrative as well, in the RWA narrative. Be looking into those facilitators and those said marketplaces and those said DApp coins and tokens that are attached to facilitators and ecosystems of this nature, because this is what's happening. This is where we're going. So with that being said, I got to get the wheel up so we can get out of here. I got to make sure that I got everybody on this wheel too. So I'm going to do a double check and we'll spin this wheel and get 3 winners. Looks like I got everybody. Nope, I lied. So I got to put 4 members on the wheel, and then we'll get a spin. Hope you guys enjoyed that video too as well. It's a very, very cool platform. I'm indulged in it, and it's pretty cool. It's a massive yield. If you guys checked it out already, massive yield on Coin Depot. All right, I gotta get these 4 on here, and then we'll get started with the giveaway. Got got you on there, Olivia, Rami, and I think we need to get yeah, that's it right there. All right, so it looks like we're loaded. Let me do a quick refresh. Let's go. Tim Shea Crypto. This is going to be the first winner. Congratulations, Tim. My man, Tim. Late April winner. What is it? Yeah, I can't believe we're rolling into May. Yeah. Tim Shea is going to be the first winner. Let's get two more. All I need is that Soul Wallet, brother. And we'll get that prize to you. Solana. I think Solana's going to get back up to $200. It's got to wait. Got to hold out, guys. Hold. Raul is going to be number 2. Congratulations, Raul. Hadn't seen you on the wheel in a while. Hope you're doing well, brother. Hope you're doing well. We need one more winner. And then we'll get out of here. I think it's going to be Reuven Shy, I think it is. It's a close one. Reuven Shy. All right, I'm probably not saying that correctly. Reuven Shy. Let's go into the Reuven Shy. Reuvenashi. Reuvenashi, is that what it is? I don't know. But hand clap to you. So there's going to be the last winner. So let's go ahead and do a recap. So we have Tim Shea Crypto is going to be that first winner. Hand clap to you, brother. And then we have a Raul DJ1SK. Congratulations, Raul. And then a Reuven Shy. I'm going to go ahead and go over that. Reuven Shy. I think that's what it is. Congratulations to you, Reuven Shy. So that's going to be number 1, number 2, and number 3. All I need is that Soul Wallet. And we'll get those prizes out to you ASAP. And I appreciate you guys coming to the live. And let's go ahead and get into this final thoughts. So again, I hope it wasn't too bearish, but I had to give it to you. The AWS is that fucking, listen to me, that Chainlink AWS thing. I'm so excited about that. I'm really waiting on the actual activity. I'm kind of looking at seeing who's getting involved. It's very cool for the developers. Enterprise, very, very cool for them to observe this as well, because a lot of entities are going to be doing the same thing. They're going to be using Chainlink. And we all know what Chainlink does. If you don't know, get to know it. It's very, very cool. And the Clarity Act, we just got to pray on that. In Middle East, we got to pray on that. And hopefully we get passage, and hopefully everything de-escalates over there in the Middle East. So with that being said, guard your wallet too as well. You know, the scammers are out there, and we'll see you guys on the next show.